Welcome to Squawk Box Europe. It's 8 a.m. here in London, 9 a.m. CET, and stock markets across Europe are opening up for trade. The early picture this morning as we pick up on a day of downbeat action yesterday, markets here in Europe were reacting to the conflict in the Middle East, the ongoing operation in Iran that has spilled across to various different Gulf states. And we were down by the close on the DAX 2.5%. So instead of minimizing some of the damage that we saw in the morning session, it accelerated into the afternoon session. Despite Wall Street actually being more contained, we saw the S&P and the Nasdaq perched higher by the finish. So this morning as we get going, more red marching onto these boards, 0.8 plus in the red, Ben.
Yes, here we are, beginning of day 4 of the US operations against Iran, and the markets are reacting. And we saw the pan-European stock 600 close 1.6% lower yesterday, adding to those losses as we saw just a moment ago. In fact, the only sector that added value yesterday was oil and gas, and it continues to be the picture, although not seeing as much of an uplift as we saw yesterday. It closed the session, that basket of stocks, almost 2% higher. Those oil majors benefiting from the increase in the oil price. We saw the price for Brent and light crude go up between 6 to 7% in the Monday session because of the Strait of Hormuz being closed and concerns over constraints on supply. It's the only one on the board of gainers that's actually gaining value. Telecoms, media and healthcare proving more resilient than some of the other sectors, but still into negative territory. Speaking about the downside, let's take a look at where the biggest fallers are. It was autos yesterday, down more than 4%. Today it's basic resources creating the biggest drag on the stock 600, down more than 2.25%. Utilities lower as well. Construction materials and banks rounding off that board of the laggards. Well, let's break it down for you regionally, and these are the main benchmarks and the numbers that they are printing in the first few minutes of the Tuesday session. It's the FTSE in Milan that is furthest on the back foot while we await the print from the German DAX. We'll keep an eye on those numbers and the moves, particularly oil prices, gas prices, and how the markets are responding. But the war in the Middle East is intensifying, with the US sending more troops to the region as Washington continues those strikes on Iran. The US Central Command said it has destroyed command and control facilities of the Iranian Revolutionary Guard Corps, as well as air defense capabilities and drone and missile launch sites. Overnight, the US Embassy in Riyadh was hit by 2 drones. This has been confirmed by Saudi Arabia's defense ministry, causing what it described as a limited fire with, quote, minor material damage, and no injuries were reported. Let's have a look at what oil stocks are doing, and as we can see, that is what's contributing to the uplift in the wider basket of oil and gas stocks. But we can see the oil majors there in Europe seeing an uplift from the increase in the price of oil. To the downside, one of the biggest slumps we saw was in the travel sector, and we are seeing that again. Further losses for the main European airlines, IAG, the owner of British Airways and Iberia, Lufthansa also lower, Air France, KLM down more than 2%, Ryanair down more than 2.25%. Well, along with oil and gas, we also saw defence stocks benefiting from an increase based on the geopolitics, what's happening in the Middle East and the news events. Not quite as uniformly up as we saw in the previous session, but some of them certainly trading higher. A senior Iranian Revolutionary Guard official has said the Strait of Hormuz is closed and Tehran will attack any ship attempting to pass through that vital oil transit route. This is according to remarks carried on state media. But Fox News reports US Central Command as saying the strait remains open. You'll notice there the price of shipping stocks higher, and in particular investors looking through the short-term impact of the hit to shipping at those higher prices, a big jump in the cost of cargo rates and the impact that could have on the takings, the earnings of those shipping companies. That is what is driving those stocks higher. Karen.